at the beginning of March 2020. We'll see a major dip across all asset classes, but then we will also notice very sharply that not first the dip in agricultural commodities was not as steep as other asset classes, and then the recovery was faster. We continue to see food prices as we see in other assets. When we look at maize, soybeans, and paddy, at the bottom left part of it, we'll see that soybeans has reached an all-time high. Maize also has gone to an all-time high as we speak, January 2020. When we look at paddy rice, there's been high volatility in the last 3 quarters, but still significantly higher than the average in the 3 years preceding our current review. What we've seen to drive this, we've seen a similar but different pattern from coffee and cocoa, which are also still within the soft commodities, but the non-food items, almost luxury commodities, but also more affected by the pandemic and the lockdowns across different geographies. So coffee had a 3-4 year down run in prices. So we see a bit of a rally, but still quite volatile over the year. Prices are still below the high points during the business cycle, but higher than the onset of the pandemic. So it's showing some recovery in the coffee prices. Cocoa has been a very interesting one with very important discussions around living income differentials as imposed by Ghana and Cote d'Ivoire, the world's largest cocoa producers, saying that international buyers must pay a premium above the international traded prices. So cocoa naturally did a rally downwards, almost following the trend with crude oil because it's a premium luxury product. With the lockdown, we had that downward spiral. And then sometimes as the onset of the October contract on the New York Stock Exchange, on the New York Commodities Exchange, we saw the Ashes, one of the largest buyers of cocoa, take delivery on the physicals, on the derivatives market. And that saw a surge in prices upward. People still view that the upward surge in cocoa prices are still arbitrary, and traders currently are trading at a discount to international prices. Another interesting trend that we saw is the contrast in behavior between gold and crude oil, where post the pandemic, and then the impact on crude oil slash, we saw capital flights between these two asset classes. So a lot of capital that invested against crude contracts pulled out and then went on gold, and that drove a rally on gold prices. As mid-year, we started to see a correction as the summer break and the release in the movement across the economy and then travel increased over the summer. We saw that increase in crude oil prices, and then you could also see that impact on the correction on gold prices. We think over the next year, over the next 2 quarters, gold will still be bullish, but will still continue on a correction path, while crude oil will continue, hopefully will be around 55, depending on the success of the vaccine, could sustain the rally on crude oil prices, or we could see an inflection at just above the $50 per barrel price point. Food prices continue to be on an increased trend because a lot of countries continue to hold on to a protectionist policy around trade and hold on to their their strategic reserves. We've also seen this play out across cross-border transactions across different countries. Nigeria currently has eased out its restrictions on a few of the broader borders across the country, and this has significant impact on cross-border trades. Focusing now on Nigeria and the agricultural sector, looking at the third quarter contribution to GDP, agriculture inched up in its contribution, contributing 31%, but a significant part of the 31% continues to be crop production, meaning that about 27-28% of our entire GDP revolves around the success of farmers cultivating their cultivation, be it availability of fertilizer, be it climate-induced risk, be it quality of seeds and other variants that they use. We've also seen that, over the trend, looking at it over the last business cycle, agriculture continues to stay resilient. Looking at the real GDP growth at 1.3% for Q3 and about 1.6% for Q2. And it's continued to be the only sector that continues to be in positive growth through the current ongoing recession. We saw the same pattern in the 2015-2016 recession, where agriculture continued to grow between 3 to 4% through the recession. We've seen slower growth this year, but also what it's to note is the correction that happened a year after recovery. So as every sector recovered through the last recession, we saw a correction in agriculture with slower growth rates early in 2018. So we expect to see that same pattern, the recovery, but we think that the current policy stance of government will sustain increased production and would continue to encourage a growth in the agricultural sector in the short to medium term. Looking at the size in terms of absolute value, it's interesting to look at the trend on the value of agricultural as a contribution to GDP, but looking at it both from a nominal and a constant prices. As economics would always look at things from a constant prices, which pretty much backs out the impact of inflation on the size of the economy. But when we look at it in terms of the absolute naira that has exchanged hands, and compare, for instance, if we compare Q3 2020 with Q3 2019, we'll see that there is about a 1.6 trillion growth in terms of absolute value of cash moving within the economy. But then if we compare it on the real sector, there's a marginal 70 million in terms of value growth here. So a lot of the growth that we've seen in terms of value moving around has been inflation induced, and we'll see that in the upcoming slides talking about the food basket inflation. As part of what we do in the year to get prepared and to be able to see what we foresee as a trend for the new year, we typically will interview about 10,000, we interview farmers. This year we interviewed 10,000 farmers as mentioned by my colleague. And then these are some of the trends that we saw for some of the crops that have particular interest to us. So we saw increased land use. A lot of farmers used more land in 2020 as compared with 2019. And this is good because land then contributes into the volume that you get as an output. The other very important component of productivity is fertilizer usage. Even though lower, 34% of farmers used more fertilizer, but combined with the farmers that use the same or more, we have about 57% of farmers using same volume of fertilizer as the previous year or more, which fairly is good, but we'd expect to see a lot more considering that we're coming out from a very deep point in terms of fertilizer usage as a country. Interesting to look at how the land allocation varied by farmer of different sizes. We noticed that smallholder farmers, particularly holders that cultivate below 1 hectare, use significantly less land as compared with larger farmers. When we look at the trend also on fertilizer usage, the pattern also repeats itself, meaning that we find that a lot of smallholder farmers are underinvesting, while the bigger ones that have moved out of that subsistence bracket are investing more, and then their income would also increase as a function of their investments. This is a major trend that we need to watch out for because it then induces increased inequality of income, even in the rural poor baskets. We also compared how FX farmers fared compared with non-FX farmers, and we see that 46% of FX farmers within our community used more land as compared with 38% in the broader sample. 40% of FX farmers also used more fertilizer as compared with 30% for maize cultivars. Looking at soybeans, it's important to look at soybeans. North Central as a region contributes for over 70% of soybeans contribution production in the country. States between Benue, Taraba, and Niger State are the largest producers of soybeans. And then we have Kaduna and Katsina coming behind them. When we look at focus on this basket, we see that 49% of farmers use more land, but only 36% of farmers use more fertilizer. When we also look at this in terms of the quality of the fertilizer used for the crop, traditionally you would have single super phosphates as the right fertilizer to use for soybeans production across those belts. But then because of the scarcity of that particular fertilizer over the last 2 years, we've seen a usage of the standard NPK varieties of fertilizer for soybeans, which then also reduces the output. So generally, as we'll see in the upcoming slides, soybeans really dipped in terms of the volume outputs. And this is one of the things that we continue to push when we engage with policy stakeholders to focus back on that crop, because it is a major driver of our protein consumption as a country, both in its contribution into the protein value chains like poultry and fishery, but even in itself as a substitute for nourishment and food production. We saw similar trends comparing FX farmers and non-FX farmers, with over 50% of FX farmers investing more as compared with about 45% in the broader sample for soybeans. Paddy rice, it's worthy to mention that the survey we did and the report here precedes the onset of the flood. So at the time when we surveyed and asked for farmers, the outlook was still strong. The number of land used for cultivation of paddy rice was quite large. And then the fertilizer investment. So investment in paddy rice, investment by paddy rice farmers exceed those for maize and soybeans significantly. We see 61% farmers use more land as compared with the previous year, and 49% use more fertilizer. Now, unfortunately, we had the flood incident that wiped out, based on industry estimates, about 2 million hectares of rice, which significantly then depleted our aggregate outputs for the commodity. It's interesting to also see that within the same pattern, up to 71% of FX farmers use more fertilizer for their land as compared with 57% of the sample. Now we'll be looking at how all these drivers then link into quantity of production, the demand side factors and the supply side factors, and how both of these could influence on pressure, prices, what we've seen season till date, and what we expect to happen over the next 5 to 6 months. Again, touching a bit on inflation and looking at primarily focusing on food basket inflation, we will see the NBS announced the 19.5% inflation figure for November. And this seems to be quite a high number for a year-on-year inflation rate. But when we look at it over a trend between this last business cycle, the last 5 years, we'll see that there is a similar pattern coming out of the 2016-2017 recession. You'll see that the slope and the trajectory are quite similar, and we feel this current inflation is also induced by the expansionary stance of policy around getting us out of the recession. So we've seen around the COVID-induced recession that we currently are. So we've seen increased spending from the private sector on COVID. We've also seen a lot of expansionary stance, both from the central bank on the monetary policy, but also even on the fiscal regime, with governments inducing a lot of funding inflow into underprivileged and the bottom of the pyramid population to really drive up spending and aggregate consumption power, which can then pull the economy out. Our view is that we're at the tip of we're at the point of inflection on the food inflation, and we expect this to normalize, particularly when you look at the month on month, which is a lot more volatile, but with lower numbers. We will see that the month on month has reached its peak and it's starting to taper. So we expect that further months should have a slower inflation rate as compared with what we have towards the last few months. Also, the impact of the harvest would also show on prices over December, January, as food prices generally have reduced as compared with what they were comparing prices of onions and a few other commodities at the household level. Industrial raw material focused crops like maize and soya beans have followed a different pattern, which we'll look at in the coming slides. Looking at production outputs, and this data looks at FAO, but also picks from NARLS production forecast or production report for 2020, unofficial data FAO, and official release for NARLS. So we'll see 11.5 million metric tons of maize being produced, about 500,000 above last year. Actually, by demand and supply based on number, we should have met our demand, which is 11.5 million metric tons of maize annually with this volume output. But there are other drivers that I would mention that I'll mention in a moment. But then we've seen increased maize production almost at the same level as 2016, when we had the highest in the current business cycle that we're reviewing. Soybeans is the opposite. We've seen 50% production of what our peak is. Actually, this year we produce about 368,000 metric tons, which is about 35% of the production levels in 2016 and 2017. And we can already feel this on the current prices of soybeans. Again, like I mentioned, the drivers behind the low volume of soybeans produced is the lack of availability of the right fertilizer that we'll see over the last 3 years. And this has really declined even further the yields that are being recorded on soya farms. And the farmer always wants to earn a certain amount, so he then induces the price. Also, we've also seen significant increase in the demand of soybeans because our local price continue to trade below international prices. Paddy on the other side would have been a great year, and the trend over the last 4 or 5 years in terms of increased production would have been sustained, if not the impact of the floods that wiped out a lot of our fields. So you see a massive reduction in the production of paddy rice, in the output of paddy rice, because the wet season, which is the major season, had almost 2/3 of the harvest wiped out. Even though the year started on a moderate price of paddy rice, we expect that between now and the next few months, there may be some prices to start to inch up. The good trend about paddy rice is because we've already built a system as a country with multiple production. Kebbi and Jigawa both have three cycles of production of paddy within the year, while other states have 2 regular cycles established. With this pattern, we think we'll be able to react better with paddy rice prices and moderate the prices in the months to come. Again, drilling into the numbers, we'll see for maize that we've continued since about 2020. We've continued to trade above import parity and significantly higher than international prices. Currently, prices of maize are at about 882,000 naira. And looking at the import parity, if maize was allowed for importation, we'll be landing at 131. thousand um, if there was official Serbian allowed importation, and will finance that importation. However, we all understand that maize is now on the export ban list, so the chances of imports reducing or dragging down the prices of maize are quite low. Internationally, we've also seen a significant increase in prices, crossing the $200 per ton price, which is an all-time high since the 2007 commodity bubble, commodity rally that we witnessed globally. Um, the analysts have different view on how long this new commodity rally would last. Would it last into a supernormal bubble, or will there be an immediate correction as the countries open up and vaccines become widely spread? Our view is that maize prices um, will continue to inch up. We'll continue to inch up, except certain things are done. The central bank is currently working on a very aggressive dry season maize cultivation, which will produce maize by around April, May. If that is successful and we have a new surge of volume on top of the 11.5 million metric ton already produced, then we will see a correction in the price. We also had a press release a couple of weeks ago about releasing grains held in the strategic grain reserve. 300,000 metric ton is about 10% of industrial usage of maize, and enough to start to dampen the prices to affect a supernormal bubble in maize prices. We think the fair value of maize is around 165 to 170, but we also understand that the speculatory pressure and then the impact of the cross-border trade with Niger could drive prices up to the 220, 225,000 range in the next few months. Looking at soybeans is a crop where we produce currently under parity, meaning that soybeans in Nigeria is cheaper than soybeans in the world. Despite that, we have one of the best quality and also the non-GMO soybeans, so which is trades at a premium to global soybeans trade. We've seen a lot of exports, from local players buying Nigerian soybeans for exports, and that has also continued to increase as the naira has devalued over the years. This then puts increased demand pressure on the crop, which currently we only looking at 2020, aggregate demand on soybeans is about 1.5 million metric tons, as compared with a production figure below 400,000. So there's going to be huge pressure on soybeans. Prices will rally very significantly. We see a possibility of soybeans trading close to 300,000 over the next few months per metric ton over the next few months. Fair value of soybeans based on farmer cost of production would be at about 230 to 240,000 per metric ton. Paddy rice is another interesting commodity, important because it's a major staple. We've seen significant convergence between parity price and domestic prices. This has been fueled with the continued effort of policymakers to ensure that we're able to increase our production. We fear that this last harvest will induce a short-term rally, but we're confident that we are able as a country to manage paddy rice production in the next few years. Definitely a lot of work needs to be done. We need to improve our seed varieties across all the commodities. We also need to ensure that farmers can have access to credits in a more sustainable and efficient manner. Key factors that will shape the commodities are just putting it all together. Exchange rate will be a major driver. Commodity is one of the only asset class that over the last 10 years will match the naira and its devaluation one-to-one. So it becomes a natural edge. Also with the AFCTA being, trade anchor starting in the medium to long run, we would continue to see the interchange between the naira and the CFA, and then this exchange rate continue to drive commodity prices locally and the availability of it. And this will be driven both by the informal imports and then the exports between neighboring countries. CBN dry season cultivation for maize and rice will be a major booster to overall performance of prices and availability of commodity between now and June. If both are positive, then we will be able to have a perfect correction in rice and sustain the price with that convergence of naira and import parity. For maize, if we have a good crop, we'll be able to moderate the inflation that we see and then curtail the maize prices at sub 200 level. If this doesn't happen, then we're looking at the scenario of about 225,000 naira as the fair value, as the price of maize, as a possible price of maize in the coming months. Cash liquidity and availability. So one of the other drivers is that because of the very low yield regime that we have and the very few asset classes that are available in the market, we've seen a lot of diversion of investment capital from traditional asset class into agricultural or commodity-backed investment class. And we've seen this both as an exchange, as a commodities exchange. We've seen this played by both institutional investors as well as retail investors that have been able to really build value over the last few months by investing in several products that we offer on COMEX, our trading platform. This would, in the short run, continue to also be an active player. We also see a lot of informal sector players that do invest in commodities, and then these are also fueling some speculatory activities in the market. While in the short run, it could induce some spikes, in the long run, what you need to then see is where the risk or the price risk can be shared equitably between the investor, the producer, and the processor. And that's the essence of a commodities exchange and what we stand for as FX by creating these financial assets for participants to be able to play in. Thank you.
Thank you so much, Deji. That was a very interesting presentation. Please just highlight again, if you have questions, please drop in the Q&A box. If you have comments, please leave them in the chat section. We're also live on YouTube, so you can also stream on YouTube. We'll just go straight to the Q&A box. We have a lot of questions here, and please just keep them coming. We have one from Omoni Olayemi. She says, kudos to the Apex team. Does Apex have plans to support farmers and commodity production via provision of irrigation services to smallholder farmers, just like it does already with fertilizers?
Interesting that as we speak, in 4 states, we are piloting an Israeli-based technology that brings in a low-cost approach, a low capex approach to irrigation, and this is part of our role in supporting central bank's agenda to make new crops and increase dry season cultivation of crops. So the short answer is yes, but it's a difficult challenge and one that we need to continue to focus on technology transfer to smallholder farmers and also our capacity to create these irrigation equipment locally to drive down cost. But yes, that's the path for the long run. I don't know.
Thank you, Deji. Yes, we're going to be sending across the slides after the conversation, so don't worry. We have another question. What role do you reckon the increased price of fertilizers played in the reduction used by smallholder farmers?
So in the last production year, what we saw was so official prices of fertilizer were actually low. Fertilizer in Nigeria was one of the cheapest officially. However, due to the restrictions on the supply chain, at the time when the lockdowns were easing and how that affected fertilizer importation and distribution across the country, you had scarcity at the last mile. So farmers paid twice the price of fertilizer, twice the official price to be able to buy the same fertilizer. And this definitely you would see in terms of the decline in some region on the volume. So most farmers use the same or less farmers fertilizers compared with the land allocation. So this definitely has an impact on the aggregates, and we are in talks, and we are aware that there are certain reforms ongoing in the fertilizer sector under the Presidential Fertilizer Initiative. We support a more market-led approach, which I think is what they are evolving into now.
Yes, I hope that answers your question. We have more questions coming in. We have one from Mr. Deji Adebusoye. What is the expected impact of open borders and influx of foreign rice on paddy prices?
So for paddy specifically, what we will see is so the production, the prices of paddy, Naira adjusted prices of paddy is cheaper in Benin versus in Nigeria. So Nigeria paddy is more expensive than Benin. So we have aggregates we're a net buyer of paddy from Benin Republic. Depending on which border is open and depending on which product is qualified as importable, officially or unofficially, will then increase the flow of paddy. What we've seen is that there continues to be some flow in the southern borders, but then there is still a restricted flow in the northern borders of paddy from Benin to Nigeria. But when you compare prices, paddy prices in Benin is cheaper than what we have in Nigeria. But even though the prices of paddy also from harvest, November till date, has been moderate. So we initially had a high at about 195, 200. And then as we turned right after the festive season, that dropped significantly down to, I think, a low of about 170,000 XKB as a reference point for paddy prices. We're starting to see that inch up now, but also we think that is more because of the volume availability and the scarcity imposed. So now if there are still paddy inventories in Benin and it could find its way to Nigeria, it should help to moderate prices over the next couple of months. The next harvest will come out in April, and we are certain that this should be able to reset prices over the next 6 months, over the 3 to 6 months window.
Thank you, Deji. We have more questions. We have a question from John. He's asking, what is the determinant of land expansion? Is it driven by supply or demand? So there are like 3 questions in one, but I'll just let you go one at a time.
Can you repeat it again?
What is the determinant of land expansion? Is it driven by supply or demand?
So the biggest driver of land, increased allocation of land by farmers, is always the price of the alternative crop from the previous season. The second driver is also the type of inputs they have ready in the current season. So if, for instance, this year maize prices and soybean prices have done significantly well, then farmers will invest more in those commodities next year and will reduce allocation to another crop that didn't do so well. You also have situations where if there is an ongoing policy work by the government to say we're promoting or financing rice or maize producers, you then see an influx of farmers to shift into this crop. So I think these are the major drivers of land allocation, purely economic reasons.
Okay.
I don't know.
Yes, we have one question from Yunusa Ibrahim. He's asking, considering what AFC FTA commenced operation earlier this year, what would you say is the impact of the regional trade deal on the Nigerian agricultural sector, and how will this affect commodity prices?
I think, so the AFC, the assumption is that the member countries that have signed into the FCTA will continue to support open and free borders. But you would agree with me that even though a few of our borders have been opened, we don't have a free trade flow uh, across the borders. So also, when you look at it as from a point of definition of country of origin, definition of what product is allowed and what product is not allowed, these details have not been defined by member countries. So when we look at AFCTA and its impact, I prefer to look at it from a more longer time frame. So you look at it, what will be the impact over the next 5 to 10 years? Because for us to even harmonize our policies, both the tariff and non-tariff barriers to trade, the red tapes, and the customs and all of this, and then cascade it from policy to actual it being implemented on the borders of the country, we're looking at a 3 to 4 year horizon. So it's hard to look at AFCTA and the short-term impact of crops in the 1 year horizon.
Okay. We have another question that is tied to what you had answered earlier, but from Nelson, he's asking, with the opening of the borders, what impact do you see on domestic prices? Particularly
will differ from commodities. So we're net importer of paddy rice, and our local prices are higher, like I mentioned. So we should see a support in an increase in supply due to the import from cross-border trades. For maize, we are net exporter to Niger, and with the naira devalued against the CFA, Nigerian maize is cheaper in Niger, and we've continued to see significantly pressure on the demand side, with a lot of products crossing the border to Niger. For soya beans, I think that's one where there was also a lot of massive exports out of Benin Republic, which is also a major producer of soya beans. So what could have come into Nigeria had actually gone to global markets because of the prices trading below international prices. So maize, it will be positive for paddy, it will be positive. For negative, it will be increased pressure, so negative on prices. For soybeans, it's muted.
Okay. We'll just answer some questions that are coming in from our YouTube, people that are watching live on YouTube. And we have a question from Adebayo. He's asking, what is the outlook for meat on the back of the recent announcement that federal government will release 300 metric tons into the market? How will this affect spot prices?
So we've seen price over the last 2-3 weeks taper and stay at the 185 threshold, against about 6 weeks before then, a weekly rally of about 5% week on week over the 6 weeks before then. So these announcements and the release of the grains are sort of helped to stabilize the prices. We're not sure whether it will actually reduce it in the next few months. We would only see in the next few weeks. We would only see when producers then get this product and it then has an impact on demand, then we'll then see the prices drop. But we're uncertain. But at least the announcement and the release has actually moderated the volatility that started from late November, last week of November, up until date.
Thank you, Deji. We have more questions. Okay, we have a question from Tasiu Abubakar. He's asking, flooding has been one of the reasons for declining paddy rice production. What is Apex doing or plan to do to help farmers in this regard?
I think flooding is a macro issue. I'll talk about what we do specifically for our farmers, but then I would also mention what needs to be done at the macro level. So for our farmers, we have a climate-based insurance product that covers flood and other nature-induced losses that the farmers may incur. And so for every farmer that is participating in a production activity by Apex, they are covered on this risk and a lot more. On the other side, when you look at it from a macro standpoint, these are issues around climate change that we need to be very wary of. It's issues about the management of our dams and reserves and our relationships with our country. Because even when we manage our dams here, when you have the dam in Burkina Faso or Niger or in Cameroon opened up, then this then affects either the northwestern corridor or the northeastern corridor of the River Nigers and Benue, and then has a resultant effect on us. And we've seen this pattern, which used to be sort of a 1 in 10 year pattern, reduced to sort of a 1 in 3 year pattern now. And this is due to more global warming issues and more rising in water levels and rainfalls being concentrated rather than distributed across the year. Definitely, we need to really think about being able to be predictive around these issues, using a lot of climate data which is available to plan agriculture, and finding ways that this information can be disseminated to smallholder farmers. In the last few years, we've seen the NIMET release early warning signals, but then we think a lot more can be done in making this information granular enough and also very localized such that farmers can understand the impacts that they should expect in their location rather than having a blanket statement across the country and then the number of days of rainfall across each of the zones. So there is insurance, there is data, and then there is the bigger issue of all of us need to be better citizens of the world and consider how we use the resources of the climate in a way that is sustainable.
Thank you, Chi. We have a lot of questions coming in as to what Apex is doing to create exposure for other commodities like sesame, particularly sesame. We have people are particularly interested in what we're doing concerning sesame.
So we take a very methodological approach into listing commodities on the exchange, and we do list after significant R&D, ensuring that we can continually provide assurances on the quality, quantity, and the sanctity of the contracts for those commodities. And then it's been very methodological. So on the export basket side, about 4 years ago, we introduced ginger. About 2 years ago, we introduced cocoa. This year, we are piloting sesame and cashew. And typically, we'll pilot it for a year or two, understand the variabilities involved, understand the risks and how to manage it, build systems that can ensure for traceability, transparency of transactions, but also effectiveness of settlements. And then we then make it mainstream. So we are currently piloting sesame and cashew on the exchange. And then we hope that either by next year, one or both of them will become a mainstream product based on the learnings that we've built.
Okay, we have another question from Bolahan Bello. What is the exchange disposition? Okay, I'm going to assume referring to FX. What's FX disposition to gold investments for 2021 in view of global and domestic inflationary pressures?
Can you repeat that, Adana?
Okay, so he's asking what is FX disposition to gold investment for 2021 in view of global and domestic inflationary pressures.
So gold as an asset class is an interesting one. Typically, a lot of investors or analysts view it as an alternate basket. So when all commodities are rallying, then it's one of the strongest assets that you can use to diversify your risk. So I will consider gold as well as other commodities as an alternative basket to use to diversify your portfolio of investments, such that when you have shocks, like you can see in one of my graphs where when gold went into an all-time low, and I mean, that's true. When crude oil reached an all-time low and was trading at a negative on the spot markets, globally, we had a surge and almost inverse trend on gold reaching, a significant high. Now, what that happens is that people are, so if you have a hedge between both asset classes, then you actually have your portfolio protected from that downside risk. So again, I'll say commodities naturally are a great hedge to securities and fixed income instruments. And then that's how you look at the portfolio. In terms of gold as an asset classes in Nigeria, there are regulatory concerns which we are working on. FX is also working with one of the global leaders, our traders, exchanges that trade in gold contracts globally, to introduce a gold-backed contract to be traded, listed and traded this year or early next year. So that will then create one new avenue to be able to trade in golds in a regulated and secure manner. I don't know.
Sorry. Okay, we have another question from James Shelton. He's asking, as a soybean purchaser, what strategy would you recommend regarding bulk purchase of products in 2021 with regards to your projections?
If you're looking at this ongoing season, I'll say go bullish at whatever prices that fall below import parity. Because the question will be a problem of availability for most players over and above price. And then as you know that you need a 1-to-3, if not 1-to-4 ratio, depending on which protein value chain you're working, particularly in the animal feed sector. So there will naturally be that demand for soybeans, and then there will be that pressure to find it at all costs. And understanding that Benin, which have been the supply, which have supported in the supply, and almost depleted its stockpile for the year, then we expect significant pressure on prices for soybeans down the year. So, as particularly if you are a processor, I'll say you go for soybeans at any price.
We have one question from Ruth. She's asking, does FX have plans to issue investment instruments such as ETFs for retail investors?
So we launched what is called an exchange traded commodity, ETC, that mirrors the behavior of an ETF, but brings in a basket of 2 to 3 different commodity-backed assets into one instrument that you can invest in. Like you can see on my background, please log in, download our mobile app or log in on the web into COMEX. It is COMEX at fxnigeria.com, comex.fxnigeria.com. comex.fxnigeria1word.com, and you can start to invest in these and many more other asset classes that we offer.
We have a question here from Ina. She's asking, what are plans by AFEX to show up the availability of super phosphate fertilizer, seeing how important it is to soya cultivation?
We are having discussions. We've brought it to the notice of policymakers, and I'm sure that they are working around ensuring that we have inventory of this particular important fertilizer by May, June at the onset of planting. We do not import fertilizer. We are not a fertilizer blender. So the best we could on this particular substance instance is to advocate with policymakers and ensure and hope that what is needed is done.
Okay, we're almost out of time, so we'll take one last question. There's a question asking, can you speak to the performance of the FX commodity index and FX exports index? that's speaking to the ACI and AEI?
So we typically, in the interest of time, we release a weekly report that gives you the performance on a weekly basis and also talks to how the trade on the index is behaving as compared with the open markets and what are the drivers that are driving it. Generally, on the commodities side, we've seen about 35% increase season to date. On the exports side, it's been a lot more volatile. So depending on where you came in and where you are today will then determine what it is. It's also a new index that we've released, so we're watching the trend, and we'll see how it behaves over the year. But you could also go to our website at www.fxnigeria.com, subscribe to our weekly and monthly newsletters, and you'll be able to get periodic updates on our indexes and all the other activities on the exchange.
Okay. One last question before you go. This just came in. I think we should take it. What is the scale of the impact of the continuous farmer header clashes on food crop production and prices, and how is AFEX supporting its farmers against this risk?
Again, security is no farmer or no citizen should operate or do business in an unsecure environment. Security is a right that we have as citizens of Nigeria, and it's something that we need to continue to endear the government to continue to ensure that we are able to operate both as private citizens and businesses in a conducive environment. When it comes to macro level outputs, the impact is limited for now, but the trend is dangerous. The impact limited because the number of locations, the cases are still isolated. Over the last, during the peak of the Boko Haram crisis, we had the Northeast not able to produce, which is about 10% of our arable land mass. And that was a major blow in terms of productivity of certain commodities. We've seen partial recovery. It's not at best, and increased incidents of security threats like this will continue to become a problem for that basket of production. But then as we speak today, it is still isolated. We've also seen cases between Katsina and Zafara that are isolated but are becoming systemic. And all of this need to be nipped in the bud so that we don't lose those baskets and those lives to insurgency or security threats.
Thank you so much, Deji. Thank you so much. I hope that I hope this has been a great conversation for everyone. I'm just going to hand over to Akinka Akintunde, our Vice President Financial Markets, to give us a closing remark.
Hello, everybody. Good afternoon once again. Thank you for joining us on this in this 2020 outlook. From our play in the markets, we keep seeing increased demand for commodities in the ecosystem in Nigeria, and a lot of people keep looking for structured ways and manner to obtain credible information on activities going on in the commodities ecosystem and how to channel investments in a secure and transparent manner into the ecosystem. At Apex, these are some of the things we focus on, creating a conducive environment where we could increase the productivity of the sector and on a global scale, make agriculture a relevant industry in the ecosystem and in the Nigerian global productivity. To this end, this is not the last of our engagements with the markets. We'll ramp up more activities in the year, having systemic engagement with key players across the ecosystem. Our commodities review and outlook report is available across all our channels. It will be shared with everybody that we have their contact on this call. Feel free to reach out to us for comments, any question you have, or any way you think we could improve the quality of this report. As always, we're always here to work with you and provide solutions to problems that could affect our play in the ecosystem. Feel free to reach out to us at any point in time. We're available to help. So on this note, we'll continue working on providing more structures in the ecosystem, and we'll go on and close this session now. And thank you once again for joining. It was an interesting session, and we hope you were enlightened and had a great time coming with us on this program. I'm looking forward to working and engaging with you more over time and across the new year. Thank you very much.
Thank you so much, Akiyuka. We also want to thank our media partner, PostShare, that was also live streaming as well, and thank you to everyone that joined us via our YouTube channel. We hope this was a great conversation, like Akiyuka said. And the slides will be sent across in addition to the Commodities Outlook to everybody on the call. And you can always access it on all our social media platforms, including our website as well. Thank you so much for joining us. And we hope you had a great insight into what 2021 is going to look like for the market. Do enjoy the rest of your day, and you can also stream the session again on YouTube in case you missed out or you want to catch up on any part of the conversation. So thank you so much and enjoy the rest of your day. Good afternoon.